So rising geopolitical tensions, and that is clearly having an impact on commodity markets. First up, let's talk about Brent crude. After the solid 7% uptick that we saw on Friday and 12% uptick for the last full week, Brent crude is up again today. In fact, it is near that $75 per barrel. So geopolitical tensions continue to weigh heavy. And remember, supply disruptions and fears of supply disruption is leading to the surge in crude oil prices. In fact, JP Morgan came out with a report last week, and they say that Brent crude could cross $130 per barrel if geopolitical tensions continue to escalate and if supply disruptions continue to increase going forward as well. And now remember, Strait of Hormuz is an important choke point, and Iran has in the past threatened to disrupt supply as and when there are geopolitical tensions, and if this happens, this is likely to weigh heavy on oil prices yet again. Now, this particular waterway handles nearly 25% of global oil supply, and several countries rely on this particular waterway to supply oil globally. So, if there are any disruptions in supply, this is likely to weigh heavy on oil prices, and from the $75 per barrel mark that we are seeing currently, perhaps we could see oil prices surging further as well. But what does this conflict mean for crude oil prices and the Indian economy? Can our balance sheet manage high crude oil prices? Abhishek is now joining us with an explanation on this.
Yes, Achisha, broadly after this eruption of Israel and Iran issue, we have seen a sharp rise in the oil prices. That was quite natural because of their involvement in the overall production of the crude oil. But if we decode the data, then we've found that this Iran has mere 3.5% kind of a share in the global crude oil production. But what is more important for Indian perspective is that India has already stopped importing oil from Iran almost 5 years back. So materially, we don't see a direct impact of this issue on the Indian economy. But because of this Red Sea issue, or Iran has a control on the routes on which this oil transports to the Asian countries, we may see some kind of an impact on the pricing side. So net it would not have any impact on the availability of the oil, but it may have some kind of impact on the oil prices which we have been seeing. And if we go back on the historical anecdotes, then it clearly says that historically we have seen an up to 25% kind of a jump whenever such kind of a issue happens in relation with the Iran. So the back of the envelope calculation suggests that even if oil prices will jump up to the 81 rupees, which is the 25% of the price where from this issue has been started, we could have some impact on our macro parameters, but that is quite manageable given the kind of a framework the Indian macro economy have. So the key takeaways from this issue is that, from the market perspective, is that in a near term we may see some kind of a volatility in the market, but largely market will remain in a range which would factor in the current economic and the macroeconomic fundamentals of the country. And as the time will pass on, we may see that the market will more factor in the earning growth prospects of the companies rather than that of this geopolitical issue.
If you like this video, then like, share and subscribe to ET Now.